Hi, this is Merrill Jenks with the Big Helper Real Estate Group. Today I'm going to be talking about how to figure out how much house you can afford. Determining how much house you can afford is really not that difficult as long as you make a steady amount of income. If you're on a nice set fixed salary income, usually we like to tell people that your housing, what you spend on housing should be about a third of what you make. But a main big factor that lenders look at in determining how much you qualify for is what's called your debt to income ratio. So a big factor is what are other debts? What other debts do you have? So we want to keep all of your debts, including the new proposed house payment, below 45% of what your gross monthly income is. So a lot of times people mix up the gross and the net. We're talking before taxes. If you make $10,000 a month, we want all of your debt payments to be less than $4,500 a month. And I'm sorry if that seems like big numbers, but I just, the 10,000 makes the numbers really easy for us to do the math on. So I'm sure it's not too hard to figure out what 45% of your income is, and then subtract what your other debt payments are. Now the thing on that is, we're only using, if you've got credit cards or car payments, you might often make more than the minimum payment, but when the lender is calculating your debt to income ratio, they're just going to use whatever the minimum monthly payment is. So if that credit card has a $300 balance, but the minimum monthly payment's only $25, they're going to factor in the $25. So again, if you're allowed $4,500 a month in debt, you've got some car payments, you've got some student loan payments, you've got some credit card payments. We're going to add up what all those payments are. Let's say that those payments are $2,000 a month. Well, then that means that we need the new house's payment to be less than $2,500 a month. And that's not just your principal and interest payment. We're also factoring in your taxes, your insurance, your mortgage insurance, and your HOA. So all those things in that example would have to fit within that $2,500 a month budget. And that is how a lender will determine how much you can afford in terms of qualifying for a house.